It's Monday morning, 7/8/2019. We've got Mark, we've got Matt, we've got Tim and Cody producing on the back end and coming in with the color commentary that I always expect. Cody, how much do you love the Federal Reserve and their expectations of dropping interest rates, young man? I'm going to let you lead off right here.
I personally do not expect them to raise interest rates, and I think the market is wrong. And I think there's a lot of rhetoric, news, and with Trump getting involved, I think the media is taking it as gospel. And I don't see anything that actually pushes for the Fed to do that other than people are just saying it. So I think there's a lot of media rhetoric that's pushing for, if we say it enough times, they'll do it. If we say it loud enough, then it's true. And I
threw you a softball. You decided to catch it and juggle with it. I'm not sure what it is you were saying right there. You could have hit that one right out of the park and just said, I hate it. I'm a hawk, and let's go and make some money. Matt, you're here for just a few minutes today. I want to start with you. How you doing, brother?
I'm doing very good today, Tim. Excited to be here for just a few minutes, and that few minutes might turn into 45. We'll see how that goes.
You're staying the whole time.
I don't disagree completely with Cody. The economic data does not support a rate cut. And I'll tell you right now, the 27% of the population that does expect a 50-point rate cut is completely insane. That is not happening. It might be a quarter of a point, but I'm not there yet. I'm not there yet. I'll be there with where I think the Fed is going to do coming out of the next 3 days. You have a lot of Fed speeches, including Jay Powell on the Hill on Tuesday and Wednesday of this week. And then you had the Fed meeting minutes coming out on Wednesday. After Wednesday, we should have a very, very good understanding of exactly what the Fed's going to do coming up in 3 weeks in July.
One thing that we're seeing here today, we're seeing downgrades across the board, and also some major institutions like Morgan Stanley coming out and downgrading the stock market because of global growth concerns. And also, the tariff and trade war kind of situation. So there are some out there that are worried about stock market in this position here, Matt. We did hit 3,000 last week, 3,006 on Wednesday. And then Friday after the 4th of July, wrapping the holiday, we're up there around 3,000. But now we're pulling back just a little bit. We're going to break it all down. Mark, pleasantries today. How you doing, brother?
I'm doing just fine. Thank you very much. Nothing makes me happier than a millennial juggle hawkish rhetoric at the
Fed. Did you want a short answer? Or did you want a long answer? Because you got the long answer. If you wanted a short answer, then yeah, I'm a hawk, and I think anyone who's
millennials being hawks just warms my soul. It gives me hope.
It should give you hope. You should not make fun of Cody for being that.
Well, I'm going to make fun of Cody till the end of time. See, I'll be 70, and Cody will be 55, and I'll be like, that youngster there. It's nice to see youngsters, so.
Yeah. All right, let's get down to business here, boys. We got a 45-minute show. I announced to our team here last week, Matt, we're going to temporarily try to do it a little bit of a new format here in terms of timing. Because we're long-winded, and this was the basis of it. We know that we're going to run long anyway, and so when we plan 45, we know it'll probably be 50 anyway. And people plan an hour for their lunch break, lets them come in and out, and that's what we're going to do. 30 minutes market analysis, 15 minutes rapid fire. Let's start with the S&P.
Very quickly. The reason I am here, and again, it might be 45 minutes, but I got an amazing guest coming onto the podcast today. And the podcast will be released later on tonight, as it always is for your Tuesday morning commute. But definitely get excited for this interview coming up. We got a big fish coming on the podcast, and I am so excited to interview him. Famous trader, famous author. So get excited for that podcast coming out later tonight.
And by the way, if there's somebody out there in the trading community, the trading world, the book community that you guys would love us to interview, send us an email, team@tackletrading.com, and Mark will at least, inquire about it and see who we can get on.
I will harass them, beg them, plead them, promise to name future Justice children after them to get them as a host.
Because this one today, Matt, will be hard to top. There's no doubt about it. All right, let's start with the market, guys. Apple was downgraded. Deutsche Bank had to cut 18,000 jobs. There's a lot of individual corporate news. Start with the S&P here. Matt, what you reading in the chart?
My reading of the chart is it kind of reminds me a little bit of what we did back here, Tim, when we kind of hit that all-time high here at about 29.65. And a lot of times the market just does this. It wants a number so bad that it finally gets the number, and then you see a little bit of a fade action, maybe a little bit of retracement, maybe some slowing down. And so you just hit that all-time high here at 3,000, and you're just seeing a little bit of a fade action. Now, obviously, there's a lot of news today, a lot of downgrades that we need to talk about as well. But that's kind of what I'm personally seeing here, is just a little bit of a fade action as we're hitting that very, very significant whole number of 3,000. But it's not just that in terms of the psychological component of 3,000. If you look at the potential average yield, which is basically the market cycle, which is basically the short-term market cycle, you have it go from 2880 up to about 2960. That's right about an 80-point movement. You go from 2740 up to about 2900. That's about 160 price movement. And then you go from right here at 2915 up to about 3000. That's an 85-point movement. So you are getting into the upper end of your range based on your yield here. And then you're coming into this significant whole number. And then you're on the backs of an Apple downgrade, an Applied Materials downgrade, Lam Research, Western Digital, NetTap downgrade. And so, and also that insane 50-point reduction in interest rates that people thought we were going to get, that we're not going to get. You're just seeing a little bit of a fade action here as it hit that all-time high.
No, we are not going to see a 50-point reduction here at the end of July. I do think that is pretty silly, although the market still has a 5% expectation based on futures probability that that's going to happen.
There's also, never mind, I won't say that one.
Well, I remember one of the things we talked about on the podcast. There's a 2% short interest on the company Apple when they had $250 billion in cash. Out of all the stocks in the market that you can short, and you're choosing Apple, it kind of seems silly to me as well.
It just tells you the insanity of some of the market participants, though.
Yep. I know there's still some people that don't believe in Bitcoin, of all things. I will say that. We won't go there. All right. S&P obviously in an upward move here.
Wait. You can't lump those together as if Apple and Bitcoin are even in the same playing field.
Shot.
It was a cheap shot.
He took a cheap shot. Give him his cheap shot. Let him own it.
We'll come back to Bitcoin, Cody. I promise you. I will have time for you to rail on Bitcoin here in about 10 minutes. Mark, bring up Apple Computer, if you would, real quick. They were downgraded today. Speaking of Apple Computer, and one of the top companies in the marketplace, downgrade brought them back into a moving average. Usually these short-term downgrades, it's a one-day move, then it gets back to trending. Mark, does this disrupt the overall picture for Apple for you?
No, as long as the 20-day rising moving average holds. I mean, that's what happens. I mean, you just summed it up. That analyst downgrade is usually a one-day event, sometimes a two-day event, but then usually things just keep on the direction that we're keeping on. So that rising 20, as long as it holds as a bounce, could have a nice bullish retracement type-ish situation going on.
Matt, as I see that, obviously we're going to need leadership out of stocks like Apple Computer to hit new highs. It does bring it back into the rising moving averages and whatnot.
Do we though? I mean, do we need Apple to, continue a bullish uptrend for the market to continue going up? I see Apple still is underperforming the marketplace. I see Amazon is still underperforming the market, Google underperforming the market, Facebook underperforming the market. So, those FANG stocks that were so popular for 5 straight years from 2013 through 2018, they haven't been the leaders in the market over the course of the last 6 months. So, a downgrade in Apple, I don't think it's going to shake the confidence of the market. The downgrades across the board, maybe a little bit of a short-term price movement to the downside, but I'm with Mark here. As long as the 20-day moving average holds, and if Apple closes above 200, I wouldn't be too concerned about Apple.
I mean, the concern with Apple, because Apple's like one of the most followed stocks there is in the world. The concern with Apple resides in its overseas numbers. Like there was a headline came out the last few days, its India sales are down 42%. One of the things that spooked Apple at the start of the year is that its Chinese sales have been slipping. Its overseas numbers are really bad. One of the things, and it really needs those numbers to sustain growth. And so Apple's earnings report this quarter could be very interesting.
Yeah. Well, I think the entire quarterly earnings season is going to be very fascinating. It always is. Every quarter, we're going to say the cliched same thing, that earnings is everything. But there's a reason why we pay attention to it so much. And earnings expectations, Matt, were lowered dramatically this quarter to where, like in the last 10 years, I think they've lowered the bar so much to where now it's going to be pretty easy to jump over it.
I was just going to say, don't you think they're lowered again? I mean,
they'll try.
Expectations are lowered again coming into it. And, coming out of the fourth quarter earnings that really kind of, third quarter of 2018 earnings that really kind of spooked the market coming into November and December. We lowered guidance coming into across the board coming into January, and January, February earnings season, you saw the market kind of go straight back up based on those lowered expectations. And I can't remember exactly what the number was based on fact sheet, but over 70% of companies beat earnings per share.
Mm-hmm. Yeah.
Which is based on however you want to categorize the downgrades going into it, that's a good number.
I agree 100%. And I do think that we're going to see a lot of companies beat this quarter because of such depressed expectation. One company that has really, really down expectations right now.
So let me get this right. Payroll numbers are strong. Companies' earnings are strong, but let's cut rates. Market's at all-time high, but let's cut
market rates. Strong. Labor data is strong.
The world is
3% wage growth strong.
Inflation.
Inflation 2%. I mean, there is no economic reason in the United States to downgrade rates.
We'll know more about it over the next 2 or 3 days. Powell testimony this week, because I was telling you guys in the pre-production show, and I think we all kind of agreed on, if you don't, let me know, but they don't want to have these weird kind of events like on the actual Fed meeting where they come out and do something the market doesn't expect. So if they're watching the expectations of the market that everybody thinks they're going to cut and they know they don't want to cut, Powell will come out this week and change those expectations through his testimony.
Well, I think you certainly have an increased probability of volatility this week, especially on Tuesday and Wednesday, than you do the actual meeting itself.
Yep. Mark, look at Deutsche Bank here. I follow so many different people, so many different chat rooms, Twitter feeds, this and that. And the expectation of Deutsche Bank going bankrupt has been there for 10 years, Matt, it feels like. And the company continues to get bad news here. They're going to cut another 20,000 jobs. How big of a deal would it be if Deutsche Bank failed as a company?
I would celebrate.
Yeah.
I hate this company. This is my number one most hated company in the world. It's a terrible bank. Absolutely terrible bank.
Mark, does it have the market rippling effects to where it's going to end up tanking the European economy and then everybody else is going to go bankrupt and it's going to topple the house of cards? I read these conspiracy theories all the time about how much, how many assets they have under management.
Too big to fail argument.
Yep.
Well, I mean, it's one of those things that you got to be careful on, because when you're in this business and you say things, you can be right 100 times in a row. But you say one thing that is cataclysmically wrong, like this, it couldn't topple everything, and then it does, then that's what people always remember you for. I mean, the financial system is so interwoven with one another. Like, listen, anybody that says they know all of the rippling effects, we just don't have enough knowledge to say that. But I usually err on the side of let me buy near the bottom and start a boomerang trade. Mm-hmm. Like when a company cuts 18,000 employees like this just did, I mean, it's obviously recognizing that it has structural problems and it needs to do massive things to stabilize its company. I mean, 18,000 is no small number. That's a huge number. Mm-hmm. As long as that remains isolated. Now, what scares the hell out of me is the next bank in Europe that announces it's cutting 12,000 people. Like if you see that domino effect, then something could be structurally wrong. And this is what I've been saying, like 2008, 2009, because when people say, oh, is this another 2008 again? Because, I mean, remember back in February of last year when the market had those, couple huge volatilities down and everyone was like, is this 2008 all over again? Because it's like, no. I mean, what's happening? I mean, people are worried.
This is not a Lehman level event with Deutsche Bank. First of all, we know, and when I mean we, I mean the market knows how bad of a company this is, number one. Number two, Deutsche, and Mark, you talked about, does this, represent a larger picture in the European banking system? The entire European banking system is structurally wrong in the first place. And number three, if Deutsche Bank even comes remotely close to failing, which they have done for years and years and years, don't you think governments, central banks will come in and bail them out?
Of course they will.
Yeah. So I don't see this as a Lehman style event. It's really sad to me that 18,000 people get laid off, and yet bonuses for the CEO and all the other executives and directors of Deutsche Bank didn't take a pay cut in any capacity. That's nonsense.
No, and I'm sure actually the stock price will probably rally off of this at some point because of that
Let's talk
reverse
about
logic.
that, though.
Yeah.
Because cuts, layoffs, stock prices usually go up, guys.
Yeah.
I mean, look at Activision. Crappy numbers, crappy forward guidance, crappy everything. But because they laid off employees at the start of the year, the market took that as a positive. And so even though there's all of this crappy news and we're slimming down our gaming lines and all this, because they were proactively cutting employees, that stabilized the price of the stock. So layoffs for an individual company, while headline are like, ooh, investors usually look at that as a sign of the company proactively getting on top of its problems and not being like GE, who's like, let's wait until everything just goes to hell before we do anything about it.
Yeah, I agree.
See is look at this trend over the course of the last, I don't know, let's go 5 years. Look at that trend in Deutsche Bank. That's worse than GE.
I don't know. Bring up GE. We can compare
it. Worse than GE.
Because GE's down today as well.
Worse. And by the way, look at that technical signal.
I know.
Oh, there's been great. I mean, breakdowns on this.
Look at that technical signal.
Yeah. Technical analysis is great.
I agree.
Break at 7.5 and a close under 7.5. I'm shorting this terrible company.
I'm looking at the Dow, the NASDAQ, the Russell. Here's our percentages, guys. Down 0.4%, 0.4%, 0.7% on the NASDAQ, 0.9 on the Russell. When we're down across the board on indexes, less than 1% on a bad Monday. I mean, it's not exactly like a crazy selling Monday, Matt. Stock markets, they all kind of look the same except for the Russell 2000. What's your expectation heading into the week with Powell testimony and other things going on? Do you think this could turn into more this week?
Well, of course it could turn into more. It always could turn into more, but you got to make decisions based on what you see at the time. And again, what I see at this time, especially think about the negative news coming into this. Downgrade, downgrade, downgrade. Morgan Stanley downgrades literally the entire stock market. And yet the stock market is only down less than 0.5% across the board. That's not a big sell-off. That's nothing. That's coming down as testing previous support levels. So as long as this market stays above this previous level of resistance right here, which just so coincides with that level of resistance back in April, as long as it stays above that, you got to be some degree of bullish, and you got to look at perhaps buying opportunities from a retracement perspective if we get a kiss off that 9 EMA right there.
Give me the dollar, Mark. I want to get Matt's take on the dollar. Obviously,
I want to get your take on something.
Sure.
You have known me and Mark's charting style for a very long time. How in the world do you think this chart is Mark's?
I was wondering the same.
I've been
Mark the charts. I'm like,
well,
how do you think that's mine?
I thought you were leaving, so I thought Mark was sharing. I'm actually looking at my own charts, and then I come back and I check your chart just to make sure we're on the same symbol. So I've got my own process. I clearly confused on a Monday. It's okay. It's okay if I'm confused. I'm making money in my account today, so c'est la vie. I'll take that one on the chin.
You compared Bitcoin and Apple. You're definitely confused today.
You were waiting for that one, Cody. See, now that's the kind of comment. You've been holding on to that for 10 minutes.
Matt, I wonder Mark would rank that joke, by the way.
I give it, in our Friday meetings, I rank the jokes that tackle trading coaches attempt to make, and I base them on the yard lines we have on our market reports, like 0 to 50 to negative. I'll give that joke a 30-yard line, Cody.
Oh, slightly.
I'll take it. I'll take it bullish.
That might be Cody's highest ranked joke. Yeah, he's usually on the negative territory.
He's been getting better.
He's
there's a running joke that Mark has that most of my good jokes are just bearish retracements.
They are. See, I give that a 20. I give that a 20. But once again, whenever Cody gets in the bullish thing, it is just a bearish retracement. Don't worry. There's a good shorting opportunity available soon to come.
That's too funny. Matt, the jobs report was strong. The dollar rallied. Does this change the technicals for you on the currency market?
It does. It certainly does. And this is the thing, when you're trading currency versus any other tradable instrument, Tim, you've got to be aware of economic reports, because the stock market, the commodity market, it's not an indication of the economy. Oil's not an indication of the economy. The stock market's not an indication of the economy. The dollar is an indication of the economy.
Mm-hmm.
So when the jobs report came out on Friday, and we had a very good jobs report, obviously that's going to break out of this, what was coming into a bearish retracement. Once you break out of that on a strong economic report, it does absolutely change the trend. I will suggest you do have a fairly significant trend line developing, as you can see, connecting those dots right there, that you're kind of breaking out as well. And so I got the dollar ranked as about neutral right now, given the fact that you're kind of in the middle of the overall range here. So I'm not looking to do any swing trades on the dollar right now, given what was happening on Friday.
You know, there's always news-based trades and all kinds of different things you can do. I mean, there's some CAD events this week, US dollar, CAD pairs, like on the monetary rate statement out of the Bank of Canada, that you could do if you're a Forex trader. But I'm with you. I think swing trades and, overall, I'm seeing neutrality as well, personally.
Yeah. Swing trades have been tough on the dollar over the course of the last year. It's really been a day trading to 1 to 2 days time frame in terms of trades. It's been very difficult to carry a currency trade over 2-3 days in the last 6, 7, 8 months.
Move on to oil quickly, Mark, if you can. Oil's got a.
Once again, you just said that Matt's run the chart, and he still says Mark.
I'm say la vie. All right, I made the mistake twice. Fool me twice, right? It is what it is. If I do it 3 times, that's a losing streak, Matt. I will own it at that point.
How can it be fool you twice when you're fooling yourself? Like,
I'm not getting in the middle of that one.
Fooled me twice. I'll fool myself a 3rd time.
There's an old phrase that I was referring to that I would prefer to just move on to crude oil here with. Matt, crude oil has got kind of a weird chart here, in my opinion. I'm neutral as well. I'm waiting for a breakout of this range. I see K-trade setups. A break above that pivot or a break below that pivot, you've got a directional potential. Until then, I don't see much.
I don't want to disagree with the K-trade scenario here, but if you're going to K-trade this under 56, I mean, where's your target? 55? I don't see that as I don't think you have to return to justify the risk on that. If you wait for a breakout of 60, you certainly have price appreciation there. A deeper level of retracement, as I talked about last week, coming down into that 55 by 54 handle, I think that's tradable at that point. But right now I see a lot of noise between 56 and really kind of 60 here. And you have kind of mixed action with your moving averages, with a decreasing 50, increasing 20, neutral 9. I mean, to me, we got to see some degree of trend start to develop. The only way I would approach crude right now is maybe credit spreads in the futures market, or naked puts on USO, something along those lines.
We talked about that on Friday, actually. USO naked puts down at that support level do make a lot of common sense. And I do think there's good credits out there if you're deep enough out of the money on the crude light. Mark, what's the bullish case for oil?
I don't know. I mean, I don't really have okay, OPEC's oil production is the lowest right now since 2014.
Okay.
That is enough for me to sell puts, because as long as OPEC has a strong desire, his production levels are lowest since 2014.
So supply side argument is bullish.
Oh yeah, because the demand side is bearish.
Yeah.
So the economic growth around the world subdued, lots of worries, creating a nice counterbalancing. They're willing to keep production levels low, but the demand side's a little weak. And so it's a great cash flow environment. I feel very confident selling. I have naked puts down there. I own oil with covered calls. So obviously I'm putting my money where my very large mouth is.
Yeah, that's okay. I like it though. I mean, listen, that's the thing about
I was expecting Mark to just say Saudi Arabia's got his back.
I thought Saudi
did in my own way.
Softball. Yeah.
Okay.
Saudi Arabia is the answer for sure.
Yeah. The Fed's got his back. Trump's got his back. Saudi's got his back.
Everyone has
his back.
They do. They do. They don't want me to lose money. And so those
I'm
Saudi.
not going to question. Mark's had a great trading year so far.
So, except for that stupid Cron that I sold the next put on Friday.
Listen, you're lucky I wasn't there. That's not a good trade.
Hey, Mark, pull up Cron chart.
You're down a damn nickel.
Listen,
down a nickel.
Why don't you come into the spread and buy it back for a break even so that you can quit bitching about it? How about that? Huh?
Tim had a naked put. If you weren't on the Friday show, Tim had a
Matt,
naked
he has
put.
an opportunity to come into the spread and exit this trade now, but he would prefer to stay in it because if he loses, then he can complain for the next 3 years about losing on Cron.
Hey, I got a prediction. Mark's going to get Cron put to him, and then he's going to have his GoPro moment for the next 8 months.
No, and this is what I'll do. Is even though I don't know anything about this company, and I only did it because I didn't want my little brother to make money and me not. What I'll do is I'll start this massive trade management scenario where I end up with like 3,000 shares of Cron.
Oh yeah.
Doing deep in the money calls, and it will be this massive position that will eventually make money, but will cause me a pain in the butt.
And all you need to do is do it publicly, and then you're me with GoPro.
So,
by the way, it's wonderful logic in terms of making a trade. I don't want my little brother to lose money.
It's the worst trade I've made all year. You know, just because I was following Tim off his Cron.
Well, I will tell you,
marijuana company's crap.
Well, I support it. I will tell you, 14 is a pretty solid level if you're looking to buy to do cover calls.
Yeah.
Well,
Listen, you don't trade off somebody else's picks blindly, Mark. This is trading 101. You've been in the industry for a long time.
How many times have you taken a trade off one of the coaches that tackled trading?
I'm just giving him a hard time. First of all, I love the trade. I would take delivery of Cron. It's a perfect boomerang setup for me because it's a dirty, sexy money candidate, Matt, that I know I can do good covered calls on. If I have to buy it at 14, I'm comfortable with that. Mark, you should be. I'm going to stand. Mark, I'm gonna stand behind the analysis and say that you should be comfortable with that too. It's going to end up being a good trade for you. You watch. By the way, if you're new to our show, Cody reminds me here in the chat to welcome everybody out. It's always great to have you guys. Hashtag Team Tackle. We've got a big audience here on a Monday morning in July. I know it's the summertime. You could be at the beach. You could be in your garden, but you're here watching markets with us and talking about your daily routine. Just pop in the chat and put in Team Tackle. And if you're new to our channel, subscribe and like this thing. And let's rock and roll. No more on crime.
By the way, T, I'm going to be, you know, that daily routine video we made a few years back?
Yeah.
I'm going to be updating that daily routine video to our current tackle training type activity. That should be out in, I'd say, a week and a half from now. So everybody get excited for that one as well.
Yeah, I am excited about that one. That one, it's looking like it needs a nice little update, you know, every couple of years. You know, we update our resources and whatnot. Gold is hesitating, but the weekly chart is still beautiful to me, guys. And Mark, you make the good point on this one all the time. And I'm just going to reiterate your point, let you explain it. Daily charts on gold aren't as clean, you know, because of the short-term noise in the dollar and currency moves up and down and all that kind of stuff. But that is an overall upward move and a good breakout of a multi-year range. Matt, give me your analysis first, then Mark on gold.
Short-term price action here that is very difficult to trade gold. And we've said this many times. Gold is not a day trading vehicle usually, and it's not a great swing trading vehicle. It's more of a great position versus investment type vehicle. And so when you're looking at this from a short-term price action perspective, there is a tremendous amount of noise here. And especially with the dollar doing what the dollar's done over the course of the last 2 weeks, for me, with the dollar doing what it has done, and again, come back to the dollar here. Okay, look at the dollar over the last couple weeks. It went from 96 all the way up to 97.40. Real significant movement up here to the top side on the dollar. Gold, which usually has an inverted relationship, relationship with the dollar, gold hasn't done that deep retracement. And so I take this as gold's playing a lot of defense up here. It's a safe haven type vehicle as well. And so it has shown me a little bit of resiliency. It's been impressive to watch this over the course of the last week and a half as gold has really kind of held its support channels. It's still above the rising 20-day moving average and obviously still above the rising 50-day moving average. So you're still bullish on gold, even though you really kind of went to a neutral status on the dollar. A breakout of 1440 certainly would be significant here from a position status perspective. If you drop this down into a weekly chart, you just see tremendous price appreciation. It's slowing down on the weekly chart. You certainly could see a retracement, perhaps down to 1380, 1360, 1340. I would have a standing limit order to buy at 1340. But you're probably not going to get that. Look for it to kind of fade over the course of the next week or so. I don't expect a lot of massive price movement in gold, but keep an eye on 1440. keep an eye on right now, right here at about 1384 by 1380. But as long as it stays in that neutral range, I'm perfectly fine with it.
Mark, anything to add on that one?
Powell's testimony this week will create short-term price movement. If the market interprets it as hawkish, i.e. not going to cut rates, then you'll see the dollar go up and gold could drop this week. Powell's testimony is huge for everything this week.
It's big.
So, you know, and what Powell's doing is twice a year, the Fed chairman comes before Congress and gives his testimony. Now, this has been a huge market mover at times. I mean, I remember February, March of 2018. I mean, market was in a nice little short-term rally and Powell opened his mouth and killed it. So we'll see what he does.
I think this is a bigger event than the Fed meeting, personally. So
there's room for more hiccups, and because these aren't pre-planned speeches.
Yeah.
I mean, he has pre-planned remarks, but Congress could hit him from several different angles where he divulges what they're really thinking.
I saw a quote by Art Laffer.
Our Congress members are smarter than I do.
Well, maybe
their
there's
staffers are smarter.
Do you think maybe there's a move inside Congress and politics to make the Fed a public institution?
That's not going to happen.
Think Trump wants to do that?
We do not need to evaluate something that will not happen.
No.
Trump wants to get reelected. That's all he cares about. And listen, the new Washington Post ABC News polls this Sunday showed his approval rating is at its highest level in his presidency.
Yeah.
So it's trending in that direction.
There you go. Bitcoin next, real quick peek at this one. It's holding its trend. Nothing real notable outside of that. It is upward move after that pullback. We talked about it last week. I like the pullback retracement. It did hold 10K, and now we're back on the upswing here. 12,000. Matt, anything on Bitcoin?
No, ask me tomorrow when it's at 13,000.
13 or 11 or whatever. I mean, the volatility in this thing is wild day by day.
It is, but you are seeing some consistency here, though, T. I mean, it's volatile. It's volatile and it's tough to trade, but you are seeing it, that retracement come down into that significant whole number of 10,000. You saw the hammer candle coming off that 10,000. You saw price appreciation coming out of that. Once again, I always try to bring it back to saying, okay, if you remove the name Bitcoin from the equation, if you remove Apple or the S&P 500 or gold or the dollar, and you're just looking at it from a charting perspective, right? You remove the name, you remove the emotion, you remove the bias from the equation, and you're just looking at this from a trend, you're seeing higher highs, higher lows, and the probability has to be higher from here.
Yeah. That's what I'm seeing.
Wrong. I feel like I always have to throw out that disclaimer saying it's not probability doesn't work every time. But at the end of the day, if you're just focusing on technical analysis, you got to say this market, Bitcoin is going to go back up into 13,000.
It looks great from a chart perspective. I'll tell you the other one that does all the other cryptos as well. Ethereum is looking fantastic, breaking back above 300 on a bullish retracement. We don't have Ethereum futures, but I got to tell you, on all the crypto things, that's the second biggest one by market cap, one I've been focused on for a long time as well. Mark,
our little brother, Matt, it's Ethereum and marijuana stocks.
Hey, I got to stay young, Mark. I turned 40 this year, so I'm feeling the age
Ethereum.
a little.
Tim's on the cusp of being a millennial.
It's true. Actually,
he is on the cusp.
Yeah, 1979.
So you're gonna go start trading in Robinhood now?
No, I don't like brokerage firms to steal my data, sell it to black pools, and run in front of me. So no, I will not trade in Robinhood. One of the biggest insults to logic in the world is that here's a free trade, because there's nothing free on this planet.
Free. Anytime I go out teaching, and somebody says, I always ask, do you guys have a broker? And anybody's like, yeah, I have Robinhood. I'm like, get a real broker. Come on.
Yeah.
What are you doing?
I get it.
Cheap commissions go to Interactive Workforce. Hey, I have something to ask the audience. So in addition to having this insane guest, just that we're so excited for on the Trading Justice podcast, in the game segment of the podcast today, I'm going to ask Matt and Tim in a game that Tim will eventually lose. But what I'm trying to do is give Tim that he doesn't lose for 6 months. So he doesn't feel the pain today, because, these young millennials, they get a little sensitive.
No. That's just you giving yourself joy, knowing that you've got these things expiring down the road. Those are like out of the money puts that you
wait a second. Mark, Tim's losing streak is based on karma. Do you remember about 3 months ago when we were playing a game on the podcast and we caught Tim Googling?
He did. He's a little cheater.
That's
never since then. Tim's lost every game on the podcast.
Anyways, I'm going to ask Matt and Tim to make some mid-year predictions. So I'm going to ask, how many rate cuts will the Fed make this year? Will oil, stocks, gold, Bitcoin be up or down from this point on December 31st? What shock team will not make the NFL playoffs? Ask them to choose, who do they think, Disney or Netflix, Apple or Facebook? Some of these questions. What predictions would you like me to ask them in this game today, in our final segment of the podcast? What do you want them to predict? Just put it in chat. Cody, relay those to me, because I'll ask them anything. It'll be just nice, fun. Listen, as traders, it's hard to predict 6 months out, which makes it great entertainment when I review the tape 6 months from now and play back their answers.
Oh, and believe me, Mark is definitely analytical and definitely vindictive enough to remember in 6 months to exactly remind us when our predictions were wrong.
Now, if they're right, I'll probably never bring it up.
Exactly.
But if they're wrong, then I'll have a lot of fun with it.
Tim, this is every time Mark does a prediction podcast with us and asks us to give predictions, it is just a lose-lose scenario for us.
Yeah, I understand.
For Tim, it's a lose because he loses the game as well. So,
and I've got to take it on the chin from you for the next 6 months. That's always fun. But maybe I'll win this one. That's my prediction. I'm going to win this one. First one I'm going to predict right now.
Ooh, I like that one. From
Which
company will have the highest market cap by the end of the year?
Oh,
I like that one.
That's a good one. That's actually a really good
that
one.
will go on there. All right, keep those questions. What do you want them to predict today in the podcast?
Yeah. And Matt, we usually do sectors on Monday, but I'm thinking we can just drive.
I can tell you which company will not be the highest market cap company, and that is Boeing. Lost a $6 billion bid out of Saudi airline.
Yeah.
For the 737 MAX.
I saw the news. It's stuck in the middle right now. It is not trending in the right direction, kind of down near the bottom. I do expect, this earnings is going to be very important for Boeing. And I like the volatility. Even with all this craziness, Matt, its IV numbers are really, really cheap, which I actually had Boeing on our options report this week as a volatility build trade into earnings because of the anticipation of news and the IV are cheap. Yep. Yeah, that kind of thing. Yep.
I like it.
All right, Matt, we're going to punt on the sectors. There's not much going on. We didn't have a lot of upgrade downgrades, and we're going to do rapid fire. Sound good?
Yeah, I'm fine with that.
Guys, in the chat here, if you are a veteran of our show, you know what rapid fire is. If you're not, it's where you put in your stocks. We look at them one at a time, and we give you some analysis. We've got about 10 minutes here on rapid fire, and then we're going to wrap this show up.
Yeah, your options report this week was excellent. Well done.
I appreciate that, brother. And if you are a pro member, go and watch it. I got to beat the talent Gino's high number at some point. I'm going to start putting out this on all my social media every day this week because I want to hit the high record for the quarter.
I will tell you guys, there's a little bit of a competition within the coaches of tackle trading right now.
Gino doesn't have the high record on the most viewed option.
Was it you, Mark?
Was it you, Mark?
I benefited from having the trade war occurring, and I spent a whole detailed analysis.
It was a great report. That's what it was.
Yeah.
So definitely
do not watch the option report because then I'll have to write an option report coming up. And
everybody watch the options report, so Mark has to beat Tim's quality report. That's how it works. Competition, right?
I like it.
We are very competitive.
Quality of the reports.
Healthy competition is a good thing for success. There's no doubt about it. Let's see here, Matt. Start
real quick. Leave Tim a comment. Okay, leave Tim a comment in the options report. Great report. If you have a question on the report, leave a comment within the report. Those things get viewed as well.
I love doing that. Yeah, we already have about 10 comments, and comments are always welcome. I always see them. I always answer them, especially for our pro members out there. Make sure we take care of you guys. Micron, Mark, we're going to start oldest to youngest, and we can't bring up Micron without kicking it over to you since you are tied to this company somehow. Mark, what you read on Micron?
I said last Friday when it came up, my stance is the same. Tough stock to directionally trade right now, but for the first time in a long time, and I said this on Friday, I do advocate boomerang trades, lowering level. Fundamentals are there. Sentiment is there. Stability is there for Micron for the first time forever. So selling puts at lower levels as part of a boomerang trade for the first time on Friday, I did advocate that.
I could definitely understand a 36 they could put it in 39 days from now.
I'm going to skip down to another one then and then have a debate here. AMAT, Matt, because we're talking same sector. Mark, I know the fundamentals of these companies are different, but AMAT is on my tackle 25 list, and I like the deep retracement. Micron's at a top point, AMAT's at a down point. Don't you like boomerangs here as much or better than Micron, Mark?
Well, I know Micron like the back of my hand. I also think there's more downward potential for AMAT. I'm interested only in cheap price. And like, if you back out in that chart a little bit, like our bottom floor on AMAT is still for a while. I mean, we got a big, huge distance between where price is today and that bottom floor. Micron not as far away, which is why I like Micron better.
Can I make a point on this real quick? If you sell naked put on AMAT right now, you're basically saying the trend's going to reverse and now you're neutral. Okay. And I don't like doing that in that situation. If I was going to sell a naked put on AMAT, it would have been up here selling the 43 or selling the 44, coming into a support level. If you're looking at Micron here, you sell a naked put at 36, you're selling a naked put at a very, very significant support level that was a reversal pattern. And so when you're looking at the technical setup, when you're selling these naked puts, it starts with identifying where you want to buy it at. And for me, buying it at 36 after, you know, a nice little W type formation here at 32 by 36, that's a support level I'm willing to take possession to start doing covered calls on it. When you look at applied materials, I would just much rather buy it with confirmation above 44 because you're still in a bullish uptrend.
Next, DFS, love the analysis on all that, by the way. Stephen down in Atlanta, always good to see you, Stephen. Discover Financial, obviously this sector has been hot, been strong. Banks and institutions have been going in an uptrend for a long time, but especially credit card and processing companies like AXP and MasterCard. I think there's better in this area, by the way. Go look at their competitors and then come back to me and see if you like some of the
MasterCard.
Yeah.
I mean, give me Visa. Give me either one of those above what we're seeing on DFS. I mean, DFS is
looks fine.
There's nothing wrong with it. Don't get me wrong. But when you're looking at those credit card companies, I'd much rather have MasterCard, much rather have PayPal, much rather have Visa over Discover here. So it's just underperforming. I do see the breakout here as it had that deep retracement. It recovered that, broke out of $79, set a new high right there at about $80, $81. Looking at a little bit of consolidation. But if you're looking to buy it from a swing trading perspective or a position trading perspective, any one of those other credit card companies are better than Discover here.
Mark, Jonathan, question for the podcast. Just noted, can you predict when Tesla will go bankrupt? I think that's a good one for the podcast.
Oh, Tesla, that's a good one for this.
Yeah, for this crew especially. Toll Brothers next. Mark, you're back up. Home builders, dividend payers, right in your wheelhouse. Neutral right here. What's your read? That's his read. I like it.
Well, here's the thing, because
you don't even know anything else.
Home builders have had stability, have been a pretty reasonable cash flow instrument going back almost a year now. For the floor before the market did, benefit theoretically from upward from a rate cut. There's some things there. I don't like trading home builders. I like cash flowing home builders. So I would like to see a little bit deeper pullback, but go back to Toll, there is a short-term support level that if you wanted to look, a horizontal support level that if you wanted to start the first leg of a boomerang trade at around $35 has came down multiple times throughout 2019 and found support in that $35 range. So if you wanted to sell puts or look for a first leg of a boomerang entry around 35, I would get that.
Okay, we're going to speed this one up a little bit here. Matt, go ahead.
Yeah, go ahead. Oh, go ahead.
Well, we just got about 10 I want to get through, and I wanted to get back.
I was just going to say again, when you're looking at trading, look at trading strength, look at trading weakness, right? When you're looking at the entire home builder sector here, you're seeing strength. When you're looking at XLRE, you're seeing strength. When you look at Toll Brothers, you're seeing neutrality. And that doesn't mean Toll Brothers is a bad company. Toll Brothers is a really, really fundamentally strong company, but it's on the tackle 25 for a reason. It's a cash flow instrument. It's not a trading instrument.
Yeah, and I'm going to take this next one. Disney, I'm just going to say EMA options report. Go and watch it. We've got a full analysis. It's about 3 or 4 minutes inside the report on how we're looking at Disney right now. Go check that out. High base potential, bullish candidate here. Matt, move on to Google. And Matt, I'm going to give this one to you.
Nothing to see here. I mean, well, let me put it like this. Bidirectional volatility plays on Google, but there's no trade here. There's no look at buy here, sell here. There's nothing there. Google's significantly underperforming the market, but you got mixed technicals from the short-term price action. So there's no trade here, but there is bidirectional opportunities if you know how to trade volatility.
Whole Logic, HOLX. Mark, I'm going to go back to you here.
I don't like that chart.
Yeah, we'd veto that in about a heartbeat, right?
Yeah, that'd
Yeah, I mean, you have short-term support forming at about 47.50, but we're dancing on it. Like you're below the 20-day moving average, but you're at short-term support. That's let me check that chart out in 3 days, and I'll give you a better idea. I like if I was like just running through this, I would like nothing to see here right now.
RVLV. I don't know this company, Matt. I'm going to kick this one back to you.
IPO. Don't have enough data to make probability analysis yet.
KTOS, Abel, always good to see your name and everybody else in the hashtag halftime crew here. Good breakout coming up on earnings. That looks like we're at probably close to where first target would be.
Love a retest of 23 here, though.
Retest would be a nice bullish retracement.
Retest of 23.
ZS from Bob, and let's give this one to Mark.
Nice breakout. You had a nice, short-term uptrend, formed a resistance, broke out, confirmation. Nothing but bullish little signals going on there.
What would the coaches say?
Well, the coaches would say,
we're late.
We didn't get in the exact point, but I like confirmation breakout. See, today would be my confirming day for me personally.
Confirming day was that.
But that's a first break trader. I do not trade a breakout on the first day it breaks out.
You're a conservative break trader, like step system rules. You wait
I'm more of a position entry type trader on breakouts. I do not play the first break ever.
Well, but when you hear me say you're late, we're talking swing trade, not position trade, though.
Correct. Yep.
Good break. I'm just saying when you're late, don't chase it. Don't chase the dragon. Wait for it to consolidate and break again. Wait for it to retest that breakout channel. That's all I'm saying. It's going to be a good trade.
You reminded me of our bingo game. Don't chase the dragon, c'est la vie, and short GE. We won't go to GE right now. Zoom is next, Matt, here real quick. 1 more minute. We're going to get through as many as we can. Everybody pick it up. Not this one. This was the mistake that they made. You love doing it. It's your favorite.
I just love doing it because I called it out the very second it happened.
Correct. What a beautiful company. What an ugly chart in the short term. There is not much I'm seeing there that is tradable in the short term until you get more data. Boston Science option report candidate here. BSX on a nice retracement. Just go watch the report on that one. American Express, back to Mark on AXP. We looked at the credit card companies earlier. Mark, is this one of the strongest for you?
Well, whenever you have a clear area of resistance, so like where you don't have to debate, where you don't have to go back and forth, where there's not these massive wicks that are sticking out. Traders love when you can clearly identify it because we're all looking at the same thing. So that's what I love about the AXP chart is it's just really clearly defined.
Three more triggers. Swing triggers are so important to a trader.
They are because we all see the same thing, and when it's choppy, then it's just harder to see. But this one's really easy to see. It's like McDonald's. Pull up McDonald's on that recent breakout in McDonald's. It was really clean. And so when you have these really clean entry points, it makes for some of the best trades. And McDonald's had a really clear entry point. AXP is setting up with a really clear entry point.
Agreed.
I agree. 3 quick ones, Matt. I'm going to give them all to you in your triumphant return to the halftime report here. And let's give you Starbucks.
Listen, and those damn Starbucks employees that kicked out those cops. Did you guys see that headline?
Yes, get out of here with that.
They kicked out, because a customer did not feel safe around the police officers in like Tempe, Arizona or somewhere. The Starbucks employees kicked them out of the Starbucks. Like,
Just get out of here, social justice warriors.
I haven't seen the headline.
Nonsense is ridiculous.
they kicked 6 cops out of the Starbucks because a customer didn't feel safe. Like, literally, will not
Starbucks
drink
corporate
Starbucks.
culture.
That is such
All right.
backwards thinking.
It's stupid. Okay,
Podcast
just
conversation, but
podcast
Starbucks
conversation.
corporate culture has been a joke for a long time. That's despicable. We'll talk about it on the
podcast. But in terms of the technical analysis here, like we just talked about, Tim, clean triggers. This was the best clean trigger of last week. Right.
I'm going to pull a Tim. Type into the chat clean triggers for your next trade.
That's a teaching technique, Mark. You should use it more.
Clean. Seriously, the next breakout trade you do, make it a clean trigger.
Yeah, it's a very important teaching technique as well, because when you say something, people don't hear it, but when people write it down or type it down, they have a tendency to remember it more. And so
clean
that's why it's just
seriously. Look at this chart: McDonald's, Starbucks, AXP setting up.
Okay,
really nice, profitable short-term
back to the analysis here, Chucky. Clean trigger on the breakout last week, overextended, forming a little bit of a short-term consolidation here. And coming back to that clean trigger, Tim, you get another 2, 3, 4 day consolidation. You have a clean trigger above $88. The most likely scenario is you're going to fade here in terms of the high base, or you're going to retrace to the breakout channel. Either way, you don't chase it up at the top. You wait for the next trigger on Starbucks.
By the way, at closing arguments, if we were lawyers, the judge would have to make us sit down. I know it. That's why we have to have a 45-minute plan to keep it at 50, Matt. That's the nature of us as the Justice Boys. We got a lot to say in the markets, and I don't mind. It's fun. That's why we come together and do the halftime report. NRG, real quick, Matt, I'm giving these other two to you.
Nice little energy sector stock. A little bit of a W formation reversal pattern with perhaps a breakout at 36. I know this company very well, but the question again is, if you're looking to trade it or if you're looking to invest in it and you're bottom feeding here, that's fine. But look at the utility sector as a whole. You're looking at a breakout of an all-time high. And with NRG, you're looking at a bottom feeding type situation. And for me, I'd rather be buying into strength instead of bottom feeding here.
THO from our man, Adam. He's our meme guy on Twitter.
THO?
Thor Industries.
Maybe a shorting opportunity with confirmation here, but I think there's better setups.
I'd have to check the fundamentals out of that company. I see a dividend down there as well. GNTX, last one, then we wrap. GNTX from Able.
GNTX forming a bullish retracement, had a hammer candle coming on Friday with perhaps a trigger right above 2450 on that one. That was a clean retracement coming down into a rising 20, kissing off that 90 EMA. I would have to look at the news, down 1.35% today, 33 cents. That doesn't change the retracement as long as you stay above 24, but you got to wait for that slowing momentum. You got to wait for that. If you're looking at Marty the elephant, you're still kind of hitting that support level. Wait for it to slow down. Wait for that doji. It's what we say in the scouting report meeting all the time. Needs a doji. Get a doji. Then you have an upward movement in price. So I do see a bullish retracement even with this bearish candle here, but you got to wait for a cleaner setup with a doji and then an upward movement in price.
Several things that we could talk about right here, but the only thing I want to pitch right now is the options report because I do want to break that record, guys. If you're a pro member, go and watch it. Go and watch it again. Come back to it. Make sure you go through the whole video. It's 45 minutes, bull, bear, and neutral volatility picks, Matt.
I'm just enjoying all the coaches competing with one another to get the best report out there. I feel like, we've created this environment that's just going to be really, really, really good for all of our communities. So let's go out there and let's support Tim. Let's get him a record this week on that options report so that next week when I don't know who's on the option report next week. Who is it?
It depends on if I get the record.
I'm still waiting.
It really depends if the record is hit or not. If the record is hit, I guarantee you Mark's going to come in.
And you got 35 minutes to get me email me at Team of Tackle Trading if you want me to ask Tim or Matt something that they can predict. And I don't care. It can go to pop culture. It can go to stocks. If you want them to predict what will happen in something in the last 6 months of the year, you got 35 minutes before we do the podcast. Email me at Team of Tackle Trading and I'll get it on the podcast.
Yeah. Ding, 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 ding. Let's podcast, boys. We got a big day in front of us.
Interview crew. Get excited for that. We're going to have a lot of fun with that podcast today, but that interview is going to be amazing, off the charts. And I'm going to just keep the suspense going with it until you guys download it and review it on your commute tomorrow.
I already told people in the Traders Lounge who it would be. So.
Well, good.
I'm excited. I'm excited.
Oh, c'est la vie. All right, guys. Thanks for joining us. We'll be back tomorrow, Tuesday's halftime report. That's good. Nerves should be there. I mean, that's what they say about public speaking. Doesn't matter how long you do it. You always have a little bit of nerves.
I'm so excited to talk to him.
Yeah.
He was, here's the hint I'll give to the halftime crew. It was the first book I ever read as a new trader. Very first book.
Mm-hmm. Yeah. Yeah.
Gave me confidence going in to know that I could do it.
If you've listened to our podcast long enough, you probably know who it is now. So that's a good hint, because deep in the know people will probably be able to guess that one. But if you can't, just wait for tomorrow. We'll release the podcast. And it's going to be a fun one. Matt, great job. Mark, great job. Cody, take us out. We'll see you tomorrow.